survive the economic collapse? And this is one of the biggest questions that I get on from pretty much any direction that I look that I go to. Like, it doesn't matter if I'm like, out here looking on the comment section on YouTube or looking through my emails or just talking to people personally. Everybody always has the same question, like, what is it that we're supposed to do about this? How is it that we are supposed to take this information and then use it to best position ourselves? Like, they ask me that question like as if I know what they are needing personally in their life. Like, I think about, like, what is it that you could do that would position yourself in a way that the economic collapse would have very, very little impact on your life. Like, I have sat there and I thought about it for a little bit, because I remember somebody had asked Robert Kiyosaki this question at the Rebel Capitalist, and he says, "Do you have a Lear jet? Are you ready to bail out of this country and be gone within 2 or 3 days?" Like, of course not. Nobody's in that position. Like, Robert Kiyosaki is, and there's a handful of people out there in the world who might be that way. But for the most part, people are probably going to be stuck where they're at, and they're going to need to figure out what it is that they need to do in order to survive an economic collapse. Now, again, I think, okay, so how do I position myself that has very little impact to me if there was an economic collapse? And so I think about all the different lifestyles that are out there, from the Robert Kiyosakis and the super rich elite people out there, all the way down to, the people who are struggling in life trying to figure out what it is that they're supposed to do day to day. And I think, okay, so who's going to have the biggest economic collapse impact, right, to their life? Well, the people who have the most, the people who have the most to lose, right? I mean, you think about it, really, if you were homeless on the street and you had nothing to lose and you really didn't have anything to try and keep, you're just living day to day, there's probably going to be very little impact to your life, right? I mean, your life kind of sucks already, so it's just like, what is it going to get suckier? I mean, is that what's going to happen to you? I mean, it's one thing going from having hundreds of millions of dollars in Lear jets and stuff like that to being on the street trying to figure out how to survive with everybody else. In fact, if you have these survival skills to live on the street right now, that would probably be the ultimate skills that you would need in an economic collapse, right? I mean, if somebody was to ask me, like, what skills could you take on? Probably that one, like how to survive without society's help or, anything else. That's going to be pretty difficult, right? I mean, everybody, regardless, even if you're off the grid, you have some sort of reliance on the grid, right? On the system out there, solar panels, mechanical equipment, all kinds of stuff out there, right? I mean, unless you're living like 100% nature out, like mountain man kind of style of stuff, then you're relying on the grid somehow, right? Now, you might be less reliant than others, but still, you're still reliant on the access to society just like everybody else is. And so I think about that. It's just like, okay, so what skills would you need if you were to survive an economic collapse? You would probably need the skills of what it is that people are using right now to survive on the street, because that's ultimately what you're going to need. Now, hopefully it doesn't get to that point, because that's probably going to be pretty scary for most people. And once you're in a position like that and you're losing it, mentally losing it all, then people go crazy, right? Especially if they get hungry. Once they're hungry, then they get really, really crazy. And hope, again, that it doesn't get to that point, that you don't have to be there. Now, I think about it, like, what is it that you need in order to survive? I don't know. I don't know you, right? I think about what it is that I'm looking for. I think about what it is that I need in my life. And I'm thinking that I'm positioning myself appropriately for that. I talk about how I position myself. But what it is that you have going on in your life, I mean, are you married with kids trying to figure out how you're going to survive the next few years? No retirement plan, nothing like that going on. I mean, are you in the same position I am? I doubt it, right? So you're probably not going to do the same things I'm going to do. And that's all there is to it when it comes to that. So understanding the monetary system, in my opinion, is probably the best way to position yourself, because once you have truly understood the monetary system from the Federal Reserve's view, right? Not from like somebody who's saying the Federal Reserve screwed up, because they're not the ones who are in charge of monetary policy, neither, right? But the Federal Reserve is, and once you understand what the Federal Reserve is attempting to do, then you can position yourself accordingly to what it is that you think the interest rate policy is going to be, right? And now understanding that interest rate movement is not part of the Federal Reserve's toolbox, but yet the jawboning of that is, right? Just literally talking about how interest rates are going to be into the future guides the future markets and where it is that interest rates are going. And understanding that part of things really gives you a much better ability to then make decisions on whether or not you're going to buy the house or the car or start a business or shut your business down. I mean, saying that's it. I'm not going to continue on in this environment, not with this, not like what I'm doing. I'll figure out something else. Right. And that's really what it comes down to, is understanding it for yourself, because unless you plan on being on the streets or something like that, there's really no other skills that I could think of that I would know would be appropriate for the general public, right? Other than the one of understanding monetary policy. So again, I think about that. Like when it comes to the understanding of how monetary policy is operating, a lot of times we end up being stuck in this political view of it, which is fairly dangerous to be in. It's not saying that it's inaccurate. I'm not saying that at all. In fact, I read a great article today talking about how the politics and the budget deficits and everything that's taking place right now is a leading impact to the inflation scenario that we are experiencing. And I'm thinking to myself, well, man, I would love to perpetuate, if I was the Federal Reserve looking at that, thinking, this is how we can actually push the inflation scenario, I would ride that wave too, right? And this is how I think about it. It's just like I think about things from the Federal Reserve's viewpoint, not like against them, and not even with them, just like how it is that they are seeing it. Because there's nothing I can do, right? There's nothing I can do to change their them, right? There's nobody I can vote for. There's nothing out there that's going to change how this goes down. And although a lot of people kind of have this expectation that Donald Trump can do it, he had his chance. I mean, there was a total chance of doing it, and he actually put Jerome Powell into the position. So if you want to take that idea of blaming Jerome Powell, this is Trump's fault for doing it, right? He was the one who put him up there. And even though he wanted to take him out and fire him and do all this other stuff, he's still there, right? And I don't do that kind of blame. I don't think it's Jerome Powell's fault. I think this is the FOMC's plan for decades now to try and deal with monetary policy in this fashion. They knew a long time ago that they were going to run out of monetary policy with the adjustment of interest rates, and that it was going to come down to their words, what it is that the market felt that they were going to be doing into the future. That's monetary policy. All right, what did I get up there? Blue the back, Columbus, Georgia. All right. Thank you for the $10. Maybe this will buy you lunch one day. Have a nice day. Well, thank you so much, man. I really appreciate it. We got 283 people watching right now with 40 likes, 297 people watching right now with 40 likes, and a $10 super chat. Thank you so much for the super chat. Very supportive of the channel. And thank you for hitting that like button when you come into the live stream. The algorithm will pick up the video and start spreading it around for more people to join in. And the comment section is a lot more fun when we have more people joining in on the video. All right. Prepare yourself always be 2 steps in front of everyone else. Well, I mean, that's for sure. I mean, the thing is that you don't necessarily have to be the fastest one, right? You have to be faster than everybody else. And that's really where, even if you think about it from that logic, which is kind of scary to think about, but even if you had the skills of being homeless right now, you would actually be ahead of everybody else in an economic collapse, because you would actually know how to survive in that sort of circumstance, right? Most people would be flipping out. So isn't that kind of interesting to think about, that those would be the people in the camp trying to run away from the bear would be faster than everybody else. Everybody else would be being eaten up, right? But yet the homeless, with the skills that they have today, would be able to do things that most people would not have any idea of what it is they need to do during that kind of circumstance. So that's just interesting to even think about in that fashion. I mean, like I said, I hope we never get to that kind of point, but still, I believe in the idea of being able to preserve food. I think if you were going to take on one skill that is going to be useful when it comes to the future of economic collapse or situations of social unrest and all kinds of stuff, the ability to preserve food right there is probably one of the most useful skills that you could ever have, because it doesn't really matter what else is going on out there. I mean, yeah, try to make your way of life or try to, hold on to your way of life or whatever. But when it comes down to survival, right? You can't survive without food. And it doesn't matter if you have 100 pounds of something, you're like, man, I got an abundance of food. It doesn't matter if you can't preserve it, right? You got maybe a day or two with that food. And if you can't eat it all or share it or do something with it, it's gone. So being able to preserve that food is going to be absolute critical in a kind of time of economic collapse, right? Because you're not going to be able to just go to the store and get that stuff, right? Yeah. Did I get another super chat? I did. Did I have some glasses out here? Oh, my busted ones. Where are those? There we go. Where are those? Let's see. No, those don't work. All right. My friend works at a warehouse that relies heavily on the trucking industry, and they fired about 60 people. The more I watch you, things become clear in my everyday life. Keep it up, Simon. Yeah, well, thank you, Nolan, for the 9.99, and thank you very much for that comment. This is the case, man. Like, I mean, I don't know how else that I could describe it, but when you start understanding the four economic theories, when you start understanding things like the bullwhip effect and how that starts, ripping through the economy and how there's time to it. It takes time before you really start noticing how it is that these impacts of oversupply and undersupply can really start devastating a lot of industries out there. We're seeing it in trucking. Pretty soon we're going to see it in retail space even more than we are already, right? It's just like, who knows where it's going to show up, what it's going to look like, how long it lasts. I mean, these things are not, written in stone, but you can tell that there's problems out there when you have an overabundance in something all of a sudden, or lack of something all of a sudden. You know that there's going to be investment and malinvestment that takes place from all that, and there's going to be problem reaction solutions that come from the government on top of all of it. And yeah, once you understand it, you start seeing it for yourself in your own business. Phil Nealon, thank you so much for the $1.99. Boost the word and a Sammy for all-nighter. All right. Sammy for all-nighter. What is all right. A small sandwich. Oh, okay, I get it. All right, man. All-nighter's the best, man. Sometimes I wonder if all-nighter's more famous out there amongst the economics community than some of the YouTubers themselves. All right. Let's see here. Let's cruise down here a little ways. All right. Strange. I've been buying shit like it's going out of style, upgrading my house and everything. Oh, that's cool. Chickens and firewood. Yeah. Brody says, Hyder, you should go to Vegas. Your die calls are pretty scary accurate. Tesla had a big layoff, yeah. The title could use a question mark. Yeah, it really could, huh? I was thinking about that just before I was hitting the go live button. All right, the yen dropped hard in value, but according to Luke G, the dollar's liquidity would increase if it came down also. So this seems like a simple solution. I guess time will tell. All right, people are sucking wind. Work friends are barely getting by, and we make good money. Brody says it's all the practice you've had calling out the roles these streams Rasputin like. All right, cruise down here, Lilies. I'm getting all repairs done on my house now in case dollar loses all value. Yeah, I don't know. I'm thinking that there's probably going to be coming time in the future in which that you're going to be finding carpenters out there in abundance. Like, you think about it, if there is a slowdown in the amount of new housing starts, eventually the houses that are in production right now will come to an end. They'll come to completion. And if the new starts aren't there, then there's going to be carpenters out there looking for work, right? As as the starts eventually turn into completions themselves, right? Like, if you have an abundance of completions and a lack of starts, eventually the completions start putting carpenters out there in the workforce, right? And then you would start seeing the price of it come down. not to try and forecast something like that. I'm just saying that's kind of like what's going on right now. I anticipated that the home builder sentiment was going to go positive at some point. Like I thought that that would be, eventually people would just be like, okay, fine, there's higher interest rates. We're just going to deal with it. The neutral interest rate would rise and people would just be like, okay, I want a house. And then they start going out there and participating within the idea of actually building in the new construction market. But that's not what's happening. Like people are very nervous about it. The home builders are very nervous about it. They're not necessarily nervous about anything other than the home buyer traffic. Like everything else is fairly like either very close to being positive, if not it's already positive on the home builders index, right? But when it comes to the buyer's traffic, that is deeply negative, meaning that the home builders out there are looking out there saying, man, these conditions are really good, except that there's nobody showing up. Right? Like everything is like almost right. Like the price is right, the conditions are fairly right. Like everything is like all right for the most part, except that the buyers aren't there. Right? And this is what really kind of it's like the buyer traffic sentiment is down. So now the speculation idea of building a house and being able to sell it upon completion is now negative for the home builder out there, which makes them very leery about trying to add inventory to the market, which then doesn't bring that, supply demand balance back in line. Did I get another one? 500 people. My goodness, you guys are loving this one. All right. Let's see here. $5 from Philip. Thank you so much. People constantly say we can't handle rates because of debt. Then they also say rates are going to be higher for longer. I don't get it. Well, I mean, I guess time will tell again. Like, this is funny when it comes down to it, is that when you really think about when people say that it can never, right? That's a very very interesting, like, final statement, like it can never do this ever, right? And that's what I find like very interesting when then I think about monetary policy coming after that, because nobody knows what it is that can and cannot happen, right? Nobody knows exactly what it is that the Fed's rules or ideas or anything that comes from that. Now, when interest rates were incredibly low and like low for a while, excuse me, how many people said it? The government cannot handle, nobody can handle, interest rates will never be higher because they can't handle it. It was stated over and over and over again. And I remember there was this really good interview, and it was funny because Alan Greenspan, that this lady she was interviewing him, and she asked him that question with the idea that interest rates will never rise again. And Alan Greenspan, he kind of smiled and he said, oh, wait a minute, can you say that again? And she says, well, because interest rates won't ever go up again, right? And I mean, she was saying it like so matter of factly. And he was just like, okay, well, I wouldn't hold my breath on that one, right? And again, like this is during a time when everybody said that interest rates would never rise. Well, here we are, right? So Alan Greenspan knew even back then, right, that he could actually laugh at the statement that interest rates would never rise. And he was just like, and this is an old man. Like, he was thinking, nah, I wouldn't hold my breath. Like, that old man wouldn't hold his breath, knowing that interest rates were going to be rising soon. Like, he knew it, right? And so everybody else in the world who was trying to figure out how it was that they were going to create their portfolios and business plans and expectations of the future and what it is that they thought the politicians needed to do with it, Alan Greenspan already knew that interest rates weren't going to remain low. He knew then that they weren't. So this is what gave me the idea back then, just listening to him say it so matter-of-factly, that he wouldn't hold his breath on it. I thought, okay, I won't either then. And I will take on the idea that it is possible that the interest rates could rise and rise significantly because of how well, or how, like, I don't know how it was just like, how confidently that Greenspan laughed at the idea of interest rates remaining low for a significant amount of time. And so that's when I started looking like really deeply into the Federal Reserve's monetary policy. It was just like, how in the world is this going to happen? Like, how are the interest rates going to rise if inflation stays low? How is this going to work? And I started studying these speeches and started really trying to break down what was going on with monetary policy. And then it starts making a lot more sense when you start thinking about it from that fashion, that the Federal Reserve was actually looking for inflation expectation to be elevated. And they've totally got it. Like, they had an inflation expectation that was persistently too low rather than too high. Now that they have an expectation that is persistently high, they have their monetary policy working for them again. Like, they can actually conduct themselves in a way that is now as if they had the power over monetary policy again. Like, they lost it. They lost their monetary policy powers. And this is what I think a lot of people are not aware of. Like, when I look back at some of the things that they are saying and talking about and the conditions that we were in, like shortly after the great financial crisis, they were literally walking a tightrope. It was teetering, right? It was such on the edge. And they pulled it off. They look back and they're like, all these people who knew what happened and understood it for what it really was, they look back at Bernanke and they said, damn, dude, you pulled it off, right? And everybody thinks that this dude is a complete moron idiot. And it is just like, once you really understand what happened back then and how it was that they were right there at the brink of failure. Even Obama said it straight up. He called it the brink, right? And I think about it, I look back on it, I study these things, and I said, yeah, we really were, right? And I was one of them who thought we were going to be there. I mean, I dumped all my money into silver. I was like, man, this dollar's going to fail. And it was close to doing it. But they pulled it off, and they're pulling it off again. Right? And they're probably going to pull it off again because most people don't understand what it is that's happening. Right? And because they don't understand what's happening, they can use that misunderstanding for their advantage, and it works. It totally works. Like they even said, that's what we're going to do. We're going to use their misunderstandings of what has taken place for our monetary policy. Right? And they're going to call it job owning, forward guidance, signaling, and I like to use the term credible threat because it works. Right? Yeah. Anyhow, man, I'm really going off this morning. I drink way too much coffee, don't I? All right, yeah, I understand all that positive thinking stuff. I do agree, but I lived that for 10 years leading up to the lockdowns. Yeah. I just didn't participate. Like, I mean, I did what I had to do on private, but I didn't change anything about what I was doing. And everybody else did. I had to conduct myself in an appropriation to the way everybody else was doing it. And when I was on private property, I wore a mask, right? Because that's what they asked me to do on their private property. And when I wasn't on private property, I didn't wear a mask, right? Because I understand and respect what private property is and the rules of what it is that those people want on their property. Right? And so I didn't get offended by it. I didn't get, shut out from anything. I didn't do anything different. Like nothing different. Right? Now, other than like not being able to attend a lot of things that was just simply not open because of other people, but I didn't change what it was that I was doing with my life. Nor did I even I went to work every day, you know, like, you know, Yui, you are a very intelligent man. I don't listen to so-called economists. You are boots on the ground and your analysis is terrifyingly accurate. Keep up the good work, sir. Well, thank you, Atticus now. I appreciate that, man. And I do believe that my information is probably more accurate than most people's because of that boots on the ground perspective of it. Like nobody and you have it too. That's the thing. Like everybody who has a day job or even just any kind of business, I think has real-time accurate information of what's going on within the economy ahead of most economists out there because most economists are looking for the data that it is that you are living, right? But it's really difficult for a lot of us to see it because we don't have the macroeconomics theories and understandings of what it is that's taken place. That's why I study this stuff so much and put out these videos and try and talk about these theories, try to bring them up as often as I can when I recognize them and point them out. And once you kind of start getting it, then you really can do the same thing. Like, I mean, I'm nobody special, right? I mean, I barely graduated high school. I have reading disabilities. I make up my own words, stutter through them. I mean, it's just like, I'm just a regular, average, everyday dude, just like everybody else. I mean, I do have an obsession over studying economics, but, it ain't no different than, somebody studying baseball or something like that, right? You know, my boy loves baseball. He's got baseball cards spread out all over his room, all on his own investment. I won't give him any money for baseball cards because I already learned my lesson with Pokemon cards and Mac, right? So with my oldest boy. But Freddie earns his own money and he finds old baseball card collections at like flea markets and stuff, and he's busting out these collections with cards from like the 80s and stuff like that. And I'm like, dang, kid, he's 9 years old and has a collection of cards that is far beyond anything that I would have ever dreamed of when I was his age, you know? And he did it quite quick. So it's all about your obsessions and what you do with them. All right. All Nighter says, I need to do the same, Atticus. My body is telling me I need to change my diet. I'm always feeling beat up from the feet up. Yeah. Well, dude, that's construction for you, man. See, what you need to do is get yourself a nice job working over at the lumberyard, answering phones and drinking coffee, man. That's where you really want to be. Yeah. All right. I'm sure Yui and I will do another live together at the Rebel Capitals live event. Yeah, absolutely, man. We'll definitely do that. That would be a great time. Wow, 662 people watching right now, 147 likes. Go hit that like button, everybody. With 662 people watching, we should be at least, what, 500 likes? I mean, come on, guys, go hit that like button. And we'll get this video spread up to 1,000 people. That would be so rad. All right. Ooh, oh, man, these comments are coming in too fast. Okay. Is this a greaser channel? Any pompadour tips? Huh. I don't know what that means. All right, Deja Vu Peace is what is Deja? Oh, here we go. Freddie, a great investment. Freddie is a great investment. All right, let's go, President Biden. 4 more years? Are you sure? I don't know. I don't care. Whatever. CNBC should fire Kramer and put Yui in his place. Well, thank you, Matt. That would be a lot of fun, but I don't know if I could talk as fast as Kramer and not make any sense as much as he does. So, I mean, I try to talk fast and make sense. He talks fast and doesn't make any sense. Like, ignore the trolls, Yui. That's okay. No, I mean, you got to take the good with everything, right? I mean, the trolls they serve their purpose there too, right? Just like like the gesture and the, putting out the joke, the sarcasm, the stuff that the king couldn't say, right? Because the king had to show too much respect out there, but yet the jester could put it out there so that people could finally talk about it. I mean, the trolls serve a purpose, although I don't really necessarily appreciate them all. All right. What's your thoughts on service-based industries, HVAC, plumbing, with the forthcoming economic struggles? Well, I think that those type of jobs, I think that they're really good positions to have. For one, like, there's always going to be a need for them. Now, whether or not that's like something that's a feast or famine position, and depending on where you're at in the particular industry that you're providing, like if it's commercial or residential, if you're just trying to do it for a company, if you're trying to do it independently, there's a lot of circumstances that change that. But you got to think, there was never a time in history ever since mankind that they weren't trying to put some sort of structure together, repair it, do something, right? So if you're in that industry, like any kind of hands-on carpentry, HVAC, electrician, plumbing, even right down to horticultural stuff like landscaping and farming and anything like that, any kind of skill that you have where you can produce or create or repair or anything like that, I think is going to be useful in any kind of economic environment, right? No matter what. Now, granted, is there other things that you could do with your life that might score you big time? Sure. I mean, absolutely there is. But that's the case no matter what throughout history, is that there will never be a time in which that they are not trying to either put a building together or repair it, right? Do you think AI will cause a universal paycheck? I think that's inevitable anyway. I think like the universal basic income is going to be an inevitability when it comes to the monetary policy, just for the simple fact that they have to keep the money velocity moving. And if the money velocity doesn't move from the idea of, okay, let's take this back a little bit. Monetary policy would typically have money velocity moving by the lowering of interest rates. When you lower interest rates, people look at that lower interest rates thinking, okay, now I can borrow the money to go out there, buy houses, cars, go on vacation. That lowering of interest rates is no longer the effective tool that's coming from the Federal Reserve, right? The lowering of interest rates is broken. That doesn't work. The idea of doing it does work. Right. So now if they put out the forward guidance to signaling the idea that they are going to lower interest rates going into the future, then that will actually stimulate the economy by getting people out there to borrow money with the idea that the interest rates are going to be lower. They can refinance, or, whatever, prices are going to start moving up. It starts creating the inflation scenario, whatever it is that you would typically expect lower interest rates to do. The people take on that percent. However, this crying of wolf will not work forever. So how is it that the Federal Reserve and the government and all the monetary higher authority, elite thinking people out there, whatever they are, how do they plan on getting money velocity moving unless they actually just shove it right into our throats by using UBI? See, like if everybody has this UBI and says, here you go out there and just spend it. Now they have a force feeding of spending going into the economy. See, like now, this is why you see so much going on with the government spending right now, right? It's because we don't do it. Like the lowering of interest rates would typically get us borrowing money to spend into the economy. We don't do it, right? Because the lowering of interest rates doesn't work. So now the government has to be the fiscal responsible person to be out there spending money into the economy so that the money velocity continues to operate, right? So it continues to move. And then once that doesn't work anymore, now what? Right? Now, you can't, I mean, try to lower interest rates, put the forward guidance out there that you're going to lower interest rates. It might work for a little while. It might get the government to spend a little bit more, but this is getting, unrealistic and not possible. So what's eventually going to run into? Right? They're going to eventually run into a position in which that they are going to have to deal with the imbalance of the inequality, right? The rich and the poor. So you tax the hell out of the rich, and then you just give it to everybody. And you hopefully keep the whole cycle from growing exponentially worse. But that right in itself will make the problem worse. As the new money that comes into the system is what separates the rich from the poor. So there's to me, like UBI is a way of them saving themselves, like saving themselves from the inevitable collapse, right? But if they can force feed money into us and keep the system even moving even more, then that's what they'll do. Did I get another super chat? I did. Thank you so much, Osama, for the $5. Simon, you're down to earth. Nature, transparency, and honesty will keep your channel growing. You are one of very few truthful finance channels on YouTube. Well, thank you, man. I really appreciate the kind words, guys. And I'm not trying to be anything other than what I am out here, guys, because I'm not a financial advisor, I'm not an investor, I'm not the guy, I'm not that dude, right? I'm just a guy who studied a lot of this stuff and has taken on an obsession for it is really the problem, right? I mean, a lot of people obsess over all kinds of stuff, like we were just saying that. This happened to be the one that I did. And then being in the industry of like the lumber industry and being in the location I am where I'm completely surrounded by it, right? People who log, mills, the distribution part of things. Like, I mean, I'm just in it, right? And so now I got this view, not only from the very top, looking at it from the monetary policy, and not even just monetary policy from like what a lot of economists are talking. I'm talking monetary policy coming directly from the people who are conducting monetary policy and reading the stuff that they are talking to themselves about, not the stuff that they're talking to the public about. These are two communications that are completely different. This is why I know that it's more about their words than it is about their actions. Is because the words that they are using on the mainstream media, every single monetary policy article that I have ever read coming from CNBC or Bloomberg or Wall Street Journal or whatever is a very misguided, right, to the actual idea of what it is that the Federal Reserve is attempting to do. Now, When I'm saying that, it is part of their monetary policy is to misguide the people into believing that the inflation scenario is going to be elevated. It was part of it. They needed that inflation expectation to be persistently high. Without it, they would fail. It's working. And those mainstream media articles keep reiterating it, right? That is in that way they can hold on to it. If they didn't have the mainstream media working on their side, they would fail, right? But the communications, the clear communications of what it is that they got going on is pushed right through those mainstream media articles, those corporate media articles. And when you read them and you think, man, why does this sound so different from what's going on in these speeches here? Right? There's some similarities, right? There's some crossover, but there's some things that are so stated, so matter of fact, you know, prevalent within the speeches that are just not talked about out there in the public. Mainly, right? That average inflation rate over time and how they are going for an inflation target that or appropriate monetary policy is to have inflation modestly above 2% for some time, whatever that means. But that is not defined, described, or even talked about within the mainstream media, that average inflation rate. Instead, that is pushed aside and a big giant 2% target. That's what everybody looks at, right? That's how I know that it's all fake. Like all that, it's not fake. I shouldn't say it's fake. It's part of the gaslighting, right? That's how it is, right? And it's so obvious to me, you know. Thank you so much for the super chat too, Osama. Okay, macroeconomic perspective. If the wealth lives the U.S., who will be the next one to live in luxury? Someone must always be on top, right? Well, I mean, yeah. I mean, you think about it. It's not. I mean, what is it that luxurious life should look like? Right? Like would somebody else like all of a sudden have a luxurious life that would resemble that of the United States, or would that luxurious life be something different because the way that they are moving into luxury looks so much different? Right? How is it that they are acquiring their ability to move into luxury? You know, are they going to have the ability to move into luxury at the same rate and pace or level that the United States has done it? I mean, there's a lot of questions that come from that. It's unique for everybody and every time. I mean, think about like, how the Romans did and what the United States done and, what China's done. And like, you think about all these times throughout history, who knows what it's going to look like, to what levels, to how long it's going to take. You know, that's those questions are, they can go on forever. There's a what ifs forever on that. All right, Dustin, they're an icon of the channel since the viewers sent them in years ago. Oh, talking about the dice, yeah. All right, U.S. China competition raises inflation via tariffs or supply issues. The Fed might hike rates if it slows the economy. Rates could drop. Would you agree? Let me see here. If the U.S.-China competition raises inflation via tariffs or supply issues, the Fed might hike rates. If it slows the economy, rates could drop. Would you agree? I don't know. That's kind of an interesting one. I would have to kind of roll that over a little bit. I mean, uh, when it comes to like the Federal Reserve and the adjustment of interest rates, if they were to actually do it, I think it would take a rise in unemployment. Like if there was ever to be a trigger that to look for, like whatever events lead up to it, then you could probably, pinpoint that down to whatever you want. But I mean, ultimately, that's what the Federal Reserve would be looking for. If they do not have a rise of unemployment, then they need stable prices, right? Because like essentially, if everybody's working or unemployment is low, then they've succeeded on that half of the dual mandate. The other part is to have low and stable prices. So if they're having issues with low and stable prices, then that was going to be that, their focus. Now, if unemployment begins to rise dramatically and they have a situation in which that people need to go back to work, then they might lower interest rates for that reason. But that's not one that's in sight right now. And that's not even one that seems to be a major concern of a lot of people, even though we have all these layoffs. It will happen, right? There will be a moment in which that the unemployment will begin to rise, but it doesn't seem to be a major issue for the Federal Reserve, at least at this moment, right? And that's what I think is the Federal Reserve is looking for, is the rise in unemployment in order for them to, be in line with their dual mandate of low and stable prices and full or maximum employment, or whatever it is that they're describing it as now. All right. Recently, trusted auto mechanics have tried to rip me off. Times have changed. That's a bummer. All right. Andrew Dice Clay probably has a lot of gold jewelry. Being debt free is freedom. Yeah, it is. I defaulted. Now I found freedom. I'm probably a pre-dice fan, but just barely. Oh, proudly a pre-dice fan. All right. What's your thoughts on Republic First Bank crash? Thanks. I mean, I'm not surprised. In fact, I think we're probably going to have more bank failures coming up, because one of the issues that we're going to be facing is liquidity issues, right? And the Federal Reserve knows this. Like, if you just go and look at like the recent Fed speeches, I think Michelle Bowman had some opening remarks, and in there, and they've said this before, that some of the major concerns coming out of like the talks and the chatter of the Federal Reserve right now is liquidity issues. Like, they got cybersecurity as an issue, right? That's probably one of them out there as well. But that is not nearly as much on their radar right now as liquidity issues are. And I'm thinking we're seeing that when you have like the Treasury Department like reiterating it again, that they are going to be going into their bond buyback program, right, where they're going to be buying the bonds to make sure that that the Treasury market stays liquid. These are issues that are now presenting themselves. They're going to show up. Like, I don't even know how to describe it or what it is that you should look for as far as evidence of it, because the evidence isn't there yet. But it's going to be, right? It's going to find itself in the failure of companies and the failure of banks and the failure of people in general. And there's going to be like tools deployed by the Federal Reserve in order to deal with the bank failures with things like we have never seen before. Right? Now, whether it grows into such a crisis that people are like in panic mode or something like that, I don't know how big it's going to get, but it's coming, and you can see it's coming. They talk about it, like they literally talk about it, but they don't do it in such a way that is going to be like so warning to the people that they could actually react to it. That's why you have to like read these speeches and read through it all and say like, okay, this is what they're preparing for. Like, they've been preparing for this for a while. Now they see it coming and they're doing stuff about it. Like the same thing. Like, I did a video a while back saying like, people ask me if I should get my cash out of the bank. Like, if I'm worried about keeping my cash in the bank. And I said, no, but I probably should be. Right. And I'm not worried about it because, I should be worried about it because there's going to be bank failures. I'm not worried about it because I know the Federal Reserve knows that there's going to be bank failures and that they're setting up the lifeboats to save the financial system and to prevent people from going and pulling all their money out of the bank. So they're basically going to bail it out. That's not a very like reasonable or even logical way of trying to position yourself with your cash in the bank. That is very taking your chance, right? That's very risky. However, I'm not that worried about it because it's like, even like the Bank Term Funding Program, right? It proved itself, like right there, that the Federal Reserve knows that these issues are coming. They can't tell you that they have these tools available to deal with the issues, because if you knew about the tools, then you would position yourself accordingly to the tools that they would have available, right? So they can't tell you about the tools for unusual and exigent circumstances, things like the bank term funding program, because then you would then start incorporating that into your investments and everything else that you got going on out there. So I'm not that worried about the banks failing. They're going to fail. Like, I know they're going to fail, right? The Fed knows they're going to fail. The government knows they're going to fail. They're going to act surprised about it and say, "Oh, whoa, oh, we better do something about this. Here we go. Look at all these things that we had already planned." Like the bank term funding program. Anyway. Deja vu. There is no gimmick anymore. Oil, Tesla, MacBook, iPhones, PlayStation 5s, etc. won't ever sell out. No one has any clue worldwide. All right. Buck 52,000. Until they become conscious, they will never rebel. And until they have rebelled, they cannot become conscious. Well, I agree with that. Finally made a live stream. Amazing conversation as always. Well, thank you, Slack. I appreciate it. We have almost 700 people watching right now. This is incredible. Thank you so much for joining in on this live stream here on a Sunday. I didn't really think I was going to get anybody to join in. Here we got 700 people joining in on this conversation. It's amazing. I'm not sure how much longer I'm going to be out here for. The family wants to go bowling. That's going to open up here in about a half an hour. So, all right. Will any major banks fall, like Bank of America or Wells Fargo? I mean, I don't know if any of the primary dealers or any of the systemically important banks are going to fail. Like, I don't think that they're going to allow that sort of thing to happen. I think what's more likely to take place is that the smaller regional banks and stuff like that, the local banks, the community banks, will eventually get gobbled up by the bigger banks until they eventually become a single entity of the Federal Reserve. And by that time, we'll most likely be on central bank digital currencies of some sort, whether it's a stable coin or an actual like Fed Now kind of application type, use or something of that nature. I have no idea what that's going to look like or how long out that's going to take, but you can kind of see that it's taken place, right? I mean, the consolidation of banks is happening. Like, there's no doubt about it, right? And eventually it's going to get down to a point where there's no need for any banks. Everything can be done online, and the central bank digital currency or a stable coin or something like that will no longer have any real need to even facilitate the need for having a place to go. Like, it just won't even need to have it. It's just like everything will just be computer entries. Hi, uneducated economist. Do you think the collapse will happen before the end of the year? I want to walk the Santiago Camino in France and Spain, but afraid of collapse during or before I go. No, I don't like. No, I mean, what difference? I mean, like, what are you worried about? Are you worried about like being stuck overseas or something like that? Have an escape plan. Like, have a contingency plan that if something was to happen, that you can get out. And I don't know how that would look like for what it is that you want, but I would have some sort of contingency plan to figure out how it is that you could bail out of there in case of something of consequence was to happen. And then once you have figured out that plan, then go about your business like you were enjoying your life anyway. Like, that's the whole point of buying silver and gold and stuff like that, is so I can do like that way I don't have to worry about anything else. Like, I don't worry about investments, I don't worry about my job, I don't worry about the house, I don't worry about anything because I have some silver and gold. And it's not that much. It's just like I just need a little bit to make me feel better and make me have a position in which that I feel that, like, if anything was to happen, I can at least get by for a few months without any worries, right? That's how you do it. Like, don't worry about like the what ifs of life. I mean, if you were constantly wondering about what it is that's going to happen, then you're going to be stuck in an anxiety for the rest of your life. Don't do it. Just figure out what it is that you need to do in case of that emergency situation, whether it's cash or, something else. Get in that position and then go about your business. Go and have fun. 720 people watching, and the comments are just flying across the screen right now. 302 likes. Let's get it up to 600 likes, guys. Walnut lumber worth more than gold. Yeah, it's pretty expensive. I'd much rather be in Spain during a collapse than downtown Memphis. That might be true. The great rebuild starts in 2026. Gold isn't going to save us, though, God, maybe. Gold is still good, though. Yeah. Stop investing. Ooh. Yeah, some wood is sold by weight. Yeah, obsessed with gold. Um, let's see. Man, I can hardly see here. My eyes are burning. Thoughts on 25% unrealized capital gains tax? I think politics might actually start mattering at some point. Yeah, I do have to say, like, taxes suck, man. I pay a lot in taxes because of the YouTube channel and the things that I got going on. I don't really have a whole lot to write off, so it makes it pretty difficult to like, and especially just not knowing a whole lot about that whole kind of thing anyhow. But yeah, it sucks, like, to be in a position in which that you earn money and then you get punished for it, right? And that's like, I don't I've never understood that. Like, not my entire life did I ever understand it. Even when I was poor as hell, did I ever understood, like, why it is that you would want to punish people for trying to earn money. Like, you think that you would want the idea of earning money to be successful and rewarding and not being punished for doing it. But yet somehow we have a society that wants to look down upon people who have succeeded and then take from them so that their life isn't as messed up. And even as dirt poor broke as I was, I never thought that way ever. Like, never did I ever think that like that. I always thought, man, I wish I could be rich someday. Like, that's what I never even thought that. You know what I thought? I would like to be able to pay my bills. That's what I thought. That's what I thought. I thought, man, it would be nice to have a life in which that I could pay the bills and I didn't have to stress about it. Like, any bill that came up, whether it was light bill or insurance or whatever, I didn't have to try and figure out how to come up with the money for it. I had the money for it, right? And I didn't. It to me, like, anything beyond that was cool, but that's all I ever really wanted. My out of all this, and that's what I got. That's why I don't stress about, like, people are like, man, you should be doing so much better, millions of dollars, whatever, and I'm like, I don't get it, man. Like, I don't why like, anything beyond what it is that you have going on in your life, what's the point? So that you can prove that you can do it or something. I mean, is it that needed in life to find happiness, right? Do I need that so that I can have a view and music and a steak? Yeah, that's all I really want. Thank you, Angry Capitalist, for the $5. Central banks are treating US dollar as a reserve currency, but not as a reserve asset. Reserve assets seem to be gold or notes. Seems like a play. Seems like the play is mapped. Yeah. Well, and here's the thing, like, I really feel like, even with the whole, like, I don't know if you guys are familiar with the Basel III endgame, right? And I always found that kind of amusing that they call it, like, the endgame, like, like, this is the final push or something like that. But it's a way of, like, creating a regulatory system for all the banks, like, around the globe to be somewhat similar to each other. And that's, like, kind of like the vaguest way that I can describe it, like, in, kind of oversimplifying it. But part of the assets of these regulations is gold, which is something, like, I think a lot of people kind of clued in on, is that it's a tier one asset and be part of, like, as familiar to the balance sheet as something like, a dollar reserve or something of that nature. And I find this kind of an interesting topic. There's a lot to it, and there's a lot of people who have, like, some really heavy conspiracy theories over how this is, like, going to, take over the entire world as far as the banking system and financial systems go. And when you have a title of it called like the endgame, then it kind of really leads to a lot of that kind of expectations from it. But really, I think about like some of the things that are happening within the banking system and how we're probably going to end up moving into a digital realm, right? And a cashless society. There's going to be a lot more need for trust. And there is no trust when it comes to like a digital component of stuff. Like it is like there I guess when there's a contract, like if you have a piece of paper and it has a contract on it, at least you have some sort of idea that there's this contract, right? That you could take it to a court and a judge, and then the judge can make it happen, or something of that nature, right? But once you start losing the physical ability to hold something, right, and it becomes like just that digital, and you have to trust the entry on the computer, things are going to be a lot different, and people are going to think differently, and they're going to behave differently, and it's going to be a whole different type of economy and world and commerce, and everything is going to be very different. It just won't look the same anymore. People who are from the older generations of strictly using cash will find it very cumbersome to be operating in that system. They won't understand it. They won't understand how come it's that way, right? And it's just going to need to be that way in order for the financial system to continue to operate in the fashion that it is, because they need a way to not only take cash out of the system, but if they were to continue to operate, they're going to need to figure out a way to go into negative territory, right? Because like just like anything, the forward guidance, job owning, signaling of the movement of interest rates can only work as if you actually move interest rates. And since the moving of interest rates is not an effective tool for stimulating the economy, the only way that they can actually stimulate the economy with the adjustment of interest rates is to go into negative territory, right? And in order to go into negative territory, they need to be cashless society, fully digital, like the central bank digital currency or something of that nature, right? And then at that point, then yes, adjusting interest rates will stimulate the economy, because you can move it far enough past the neutral interest rate without being burdened by the lower bound of zero. Does all this make sense? I know this is difficult. Like, I probably just went right over everybody's heads with that one, but that's what's happening. I mean, it really is. And so you can start seeing the end will really be more near, like that final part push, when cash is being charged to withdraw or deposit at the bank itself. Okay. So if you're using, like, they may not say you're using digital currencies, but they are saying if you deposit cash with us, we are going to charge you a fee. And if you withdraw cash, we're going to charge you a fee. When that starts to happen, you are going to know that that is a significant sign that the cashless society is not only right around the corner, if not already there, right? Because that would be like a telling sign of it, that of being charged a fee to withdraw or deposit at the bank. Once you have achieved that part of a position of it, it will already be too late. Right? It'll, like, as far as like the reversal or change or anything like that, no, it's already too late at that point. All right, how far are we into this? About an hour into it, guys. This was a lot of fun. I don't know, what time is it? 11:45. We got 726 people. Man, I don't want to give up with so many people watching. All right, the impacts of a China-U.S. rivalry on the dollar: decreased dollar demand, increased volatility, shifts in global currency reserves, impact on interest rates, inflationary pressures. Um, hmm. How do you know that there would be a decrease in dollar demand? Like, be like, do you think China is going to be selling stuff to the rest of the world or something like that, or are the rest of the world going to try and manufacture, and China is going to try and compete with that? And if they are going to try and manufacture, who are they going to manufacture for? Right? Like, for China, or are they going to manufacture for the United States, these other nations? Right? So, and if they are going to be manufacturing for the United States, are they going to be using Chinese money? Russian money? What money are they going to use? They're probably going to use the dollar. I don't see any system in which the dollar loses. The dollar is going to fail inevitably once it crashes, like once it loses complete confidence. But when people are using it, like if more contracts are being written in dollars, right? Even if the BRICS nations write contracts that are due in dollars, how are they going to get the dollars to pay those contracts back? Now, I know a lot of people will say, well, they'll just default on them. No, they won't. Right? They default on those dollar contracts, those dollar bonds, and their credit rating goes to hell. They can't borrow money from anybody. Right? The dollar is the most important one. And as much as people hate it and the world hates it and nobody likes it, it's nothing out there that can replace it. Literally nothing. All right? And that's what's scary and sad about it all at the same time. But as a lot of people lose confidence in the dollar and say that they don't want to participate in it and everything else, there's really nothing else out there that can replace it. Right? There's nothing out there. All right. Yeah, people like the dollar because, believe it or not, stability of the U.S. system compared to the other countries globally. China can do or not do whatever they want. It doesn't impact that. That's right. And that's really what it comes down to. And it's not like, we're unique and awesome and that we're just happen to be in that position and there's nobody else who's going to be able to do it. And so, once you kind of understand it from that perspective, I mean, it's not good, right? That's the other thing. It's not like a lot of people hear me and they think, man, you're defending this. I'm not defending it. It's not good, right? It's not a good thing. It's not awesome. It's not helpful. It's not beneficial. None of that stuff, right? But understanding that it's not a good or bad thing, it's just an is. This is the way it is, right? Then you can actually position yourself to deal with that, right? Knowing that if the system continues, there's going to be continuation of the separation between the rich and the poor. If that happens, you're going to have to position yourself accordingly to deal with it. And you're going to have to know that the governments and the people out there are going to also do stuff that is going to try to not only to preserve that system, right, but then also do things to appease the people to keep them from completely losing it. Voting and moving has bought me some time. I'll take what I can get. Y'all keep not voting and complaining. No, I vote. I'm just saying I vote. Like people hear me talk and they say that I don't vote. I vote. I'm just saying that it doesn't mean anything. Right? So, like, I mean, if you want me to put meaning behind my vote, no. I'm not going to do it. Right? I do it just because I feel it's an obligation of an American, but I don't have to put any meaning behind it like I actually believe that it means anything. Right? Because it doesn't. All right. So, I mean, at least voting for president in Oregon doesn't. All right. Simon, if the Fed did eventually fail, how do you think that might go down? What would it look like? Well, I mean, I guess what would like the failure be, right? I mean, is the failure like the treasuries failing because that's what they have for their balance sheet? Like, when a bank fails, why does it fail? Because the assets on their balance sheet failed to pay. Right? So a bank loans out a bunch of money to a bunch of people for houses, cars, and credit cards or whatever, and then those assets, those loans, don't pay. Right? And then the bank fails. Well, the Federal Reserve would be in that same position. That means that the treasuries are not being paid. That means the government is failing. Right? That means everybody is failing out there because most retirement funds and pension funds and insurance policies and everything else are backed by U.S. treasuries, but these things are failing. Right? So everybody is failing. That's what it would look like. So now dollars are in the streets because dollars don't mean anything unless it is that they're still usable to pay off debt. Now, if they're still usable to pay off debt, how many dollars exist out there in the world to pay off all the debt that exists? Not enough. So now the dollar is probably going to be worth more than anything in the entire world as it's trying to pay off these debts that are defaulting like crazy because it's the only thing that they have that would pay off those debts. So this is scary, right? Nobody's loaning you money and all the money is nowhere to be found. And there's debts crashing everywhere and nobody's getting their checks in the mail for retirement and nobody's borrowing money so that they could buy the fuel to transport the food down the highway. Um, That's what it looks like. I mean, it's like everything is horrible. I don't know. Like, I mean, just use your imagination on it. Can they transition? I don't know. Like, can you transition? Transition out of the dollar. Don't use it anymore. What would that be like? It's very difficult. Try to operate using nothing but gold and silver. Try to operate using nothing but Bitcoin. Yeah, it's not easy. You can't do it really. You have to be in cash. You have to be in the system in order to have everything functioning as smoothly and quickly as it does, as efficiently as it does. So, without the Federal Reserve System there, you can basically consider like the power going out, the gas turning off, the food not being delivered, and, deal with it. Try to figure out a system without it. It's like, it's hard to even imagine. All right. What do you think about people who are saying China is shifting from US bonds to gold? Well, it they can go ahead and shift. I mean, but it isn't going to work out for them, right? Gold doesn't. Gold is burdensome. It costs money to store it, secure it, right? It costs money to transport it. U.S. Treasuries pay, right? They have a value to them. Like they're liquidable, meaning that you can sell them like right now. Nobody, not even worry about it. Right? Like the idea of like, can I find a buyer? Can I liquidate it? Is it secure? China getting out of bonds doesn't sound right. Like they might be getting out of bonds and they might be buying gold at the same time, but it doesn't mean that those two are related. Okay? And you can put as many articles and listen to as many people who will relate those two things together. Who say, no, just look at all the bond selling and look at all the gold buying, right? It's kind of like saying money printer go burr, prices go up, right? What else do you need to know? But a lot of people don't even realize how many debts are due in dollars that China has. Like China owes debts due in dollars. All right? Think about that. How do they get the dollars to pay the debts? The easiest way to get dollars is to sell treasuries. They're the most liquid market in the entire world. And China sits on a lot of treasuries. And so when they need cash, when their debts are due, when their credit rating is on the line, and that those dollars are needed to pay off their bonds, and I'm talking Chinese issued bonds that are due in dollars, all right? When that happens, you can imagine that they will go and sell those treasuries in order to pay those bonds off to make sure that the credit rating stays worthy so that they can continue to function inside of this market. The buying of gold is a completely different story. Right? And because they're doing it at the same time doesn't necessarily mean that they're related. Yeah, they could be related, but it doesn't mean that's necessity the necessity of the situation. Right? They could be selling those bonds or selling those treasuries in order to pay their own bonds and then buying gold to try and get themselves out of that third party claim, going to the United States and everybody else out there because they're probably just as worried about sanctions and tariffs and trade wars and everything else that everybody should be because the United States is wielding that sort of power. So to me, I don't necessarily correlate those two things to be the same. Even though they could be, I see it that it could be something different as well. All right, man, look at all these comments. This is crazy. 736 people watching, 384 likes, $36.98 in super chats because you guys are always so awesome. UE, you must be protected. You know too much. And it's not that I know too much, right? It's just that I went and read and studied stuff that nobody else is really looking at. And I'm not saying that they're not looking at it. I just that they didn't look at it continuously in the fashion in questioning it the way that I did. Right? Like I didn't use anybody else's guidance or theories or anything else to figure out what it was that was going on there. I'm reading this speech coming from John Williams talking about how they want an inflation expectation that is persistently high and that it's been persistently too low. and that monetary policy is always swimming upstream against an inflation expectation that is persistently too low. So I thought to myself, man, that is such weird statements coming from the Federal Reserve when everything that I have ever believed about the money printer was that it's causing inflation, hyperinflation scenario, and that the dollar is going to fail from that. But yet here I'm reading a speech coming from the Federal Reserve itself saying that, man, if we don't get some inflation expectation soon, we're going to fail. And I'm thinking, what? How is this even possible? Like, this is so against like intuitively so against everything that I've ever thought. But yet here I'm reading this speech. And then a few years later, we have an inflation expectation that is persistently high. And I can see it within the Federal Reserve saying, man, we don't need to adjust monetary policy anymore with the adjustment of interest rates. It's all our words. It's all the forward guidance. It's crazy to think about that. That's exactly what Ben Bernanke was talking about 20 plus years ago. That they knew that they would be there. They would be like, man, once we hit the lower bound of zero, you know we're done, right? But we're not done. We got other plans. We got plans to deal with the fact that we run into the lower bound of zero, that the neutral interest rate is going to be too low. That monetary policy adjustment with Federal Reserve funds rates won't be an effective tool anymore, but that's okay. We got a gold machine, our forward guidance, our jawboning. Right? And it works. It totally works. And once you see it, once you understand it, once you recognize it, it totally makes sense. Like everybody else is just totally like clueless and they're blaming everything under the sun except for the right thing, you know? All right. More dollars means each dollar is worth less. It is that simple, yo. Well, all right. What is your feedback on politicians weaponizing the US dollar? Won't that harm the US dollar? Well, of course it is, but it's all part of like the fact that the economy has gotten to the point that it is. Like, I mean, is it going to weaponize the dollar? Sure. Like, you know, like I don't believe that the government would ever be in a position in which that they wouldn't do it if they had the chance. Right? Because the economy has grown, because the United States has grown and used their debt issuance to put it to the level that it is, I think this is an inevitability. Like this was going to take place. Right? And now whether or not it looked like this or something else, depending on who was it that was in charge, like you cannot be the issuer of debt, bringing in new money by debt issuance so that you could provide the world with those dollars, anticipate that the world wasn't going to be increasingly demanding ever more of those dollars, and know that you weren't going to have to run a trade deficit from it. And now the consequences from running a trade deficit to the magnitude that we have is the results of trade wars and weaponizing of the dollar and all that other stuff. Like this shouldn't be here. We shouldn't have made it to this level to begin with. Right? Back in the 70s, when Nixon severed us from the gold standard, we should have taken the hit then. Right? Saying, okay, our standard of living is about ready to collapse. We're going to have to start doing a hell of a lot more for a hell of a lot less, start paying off our debts, start taking on the responsibility of what it is that we can provide for our future generations that is not debt burden. But we didn't do that. Right? So now we have to suffer the consequences from it, and there's no fixing it. Don't think that we can. Like, I mean, the idea that fixing it is a long gone story. Like, there is no fixing it. Okay? The only thing that you can do is best position yourselves to deal with it. But fixing it is not something that I'm going to spend time trying to contemplate. There is no fixing, right? There's no fixing. Just understand it, right? Nobody's coming to fix it. No president, no system, no banker, no nothing, all right? No gold standard, Bitcoin standard, fiat standard, brick standard, nothing, right? Because of the way that this whole system is set up, you got to understand how the monetary money or how the monetary forces start moving manufacturing from one nation to the other. Once you understand how the new money comes in and drives people into luxuries and separates the rich from the poor, all this stuff starts to make sense. You don't question it anymore. You start to understand there is no fixing it. It's just the way it is. Okay? It's just just goes that way. You know, politicians act that way. You know, the people move into luxuries that way. It's just the way it goes. Gosh, so many people up in here. We got so many super chats too. Let's go check out this one. All right. B&B, thank you so much for the $4.99, man. No comment or anything with it, but I appreciate the super chat, dude. You guys are always so generous here, man. I can't thank you enough. All right. In your view, what is the best investment nowadays? The best investment that you can do is to go to somebody who is very close to you and tell them how much you appreciate and love them. All right? You let them know how much that they mean to you and how much it is that you thank them for everything that they have done in your life to help you to the point that you are today. That's the best investment that you can do. Okay? So, and I can't think of a better one than that. Do you see a key solar component was just onshored, Simon? I think they are starting to onshore to keep the peace. I mean, and I think that they can attempt to do it, and I think that it's going to have some impact to the to the people, to the economy, to the jobs out there, to all that. And I mean, I think they will do stuff, right? And I'm not trying to deny that. What I'm gonna say is that that is all in an attempt to try and work against the economic forces that are at play right now. Right? The cheapest place to manufacture a solar panel is not the United States. Right? You can manufacture solar panels somewhere else in the world and ship it to the United States far cheaper. That's it. Right? It's just the fact. Now, we can do things to try and go against that, right? Just like flying a plane, we can do things that resemble there is no gravity. Gravity exists no matter what, just like this economic force exists, right? The fact that a solar panel can be made someplace else cheaper and shipped to the United States cheaper than what you can make here in the United States is a fact, right? And now we can do all kinds of stuff to try and go around that, to try and prevent that from happening, create laws and tariffs and all kinds of stuff. But now this is a force against the economic force. So now you have two forces against each other, right? It's not free flowing, it's not, sustainable, and it's not going to work, right? Now it can work for a while, so long as you continue to subsidize and have the tariffs and, have the trade war kind of thing going on, then you can continue on with it. But that's not exactly like free flowing. That's not a free marketing economy. Right? It's forced, right? And then anything you have forced will eventually fail. All right. Kisiki? Is that what it says? Thank you for the $2. How can an artist survive this? I have no idea. I mean, what is it that what kind of art are you into? I think of myself as an artist, right? I'm an entertainer. An entertainer is a type of artist. Okay? Even though I'm out here on YouTube trying to give information as far as the best that I can see it from the view that I have and the studies that I have done, but ultimately I'm trying to be out here and try and be an entertaining, right? Like if I was boring as hell, nobody would watch me, right? But I try to be somewhat entertaining and informative and useful with the information that I put out there. But I'm an entertainer at the end of the day, right? Here on YouTube. Same thing when I go and call bingo. Like I'm going to go do that here this evening, right? Same thing. I'm an entertainer, right? And I'm trying to, be out there, be clever, be funny, tell the jokes and deliver these numbers to a crowd of people so that they can enjoy their evening for the night, right? That's like what I do. And so as an artist, I don't know what it is that you need to do. That's what I do, right? And I hone my skills and try to be funny, try to be more entertaining, try to find places that I can, spread my information around so that I can continue to, get the exposure from it. All right, I love the bingo streams, Yui, real community. Yeah, I like the bingo streams too. But I kind of screwed that up a little bit, so I don't know. Anyway, Art means nothing when the world is scorched. No, actually, I think art means even more because what it's telling is what it is that's going on inside of the world at that time, what people are thinking and seeing. I think the art tells more history than history books or anything else. Like, just look at the art from an era and you can see what it is that's going on in the mindsets of the people. Like, look how dark it is or how, joyful it is or whatever. You can tell a lot about the people and the mindsets and what was going on in the world at the time by looking at the art from that era. Right? I think it's very useful. Um, Art becomes more important once basic needs are met. We are more aware of it and need it. Look to cave art. Look to painting. Starving artists is real. Yeah. Art equals life. The best music is made during war. Can we expect politicians to kick the can? I guess. Is there still any more kicking the can? Oh, yeah. I mean, you think about it, like if we go into a cashless society and the negative interest rates, I mean, we can continue on forever. But I don't think that that's necessarily a politician's decision on to do that. I think that's going to end up being part of the central banking part of things to take interest rates into negative territory because you're talking about the Fed funds rates, right? Now, the Fed funds rates going into negative territory means that there is going to end up being negative interest rates within the banking system, the financial system itself, which then in turn will eventually lead into a negative interest rate on the U.S. Treasuries themselves. Now, understanding what a negative interest rate on a U.S. Treasury is doesn't necessarily doesn't a negative interest rate on a U.S. Treasury doesn't necessarily mean that that bond has a negative interest rate coupon, right? See, here's the thing. Like, I think a lot of people misunderstand about negative interest rates, especially when it comes to the bond market. The bond itself might be positive, right? Meaning that the coupon rate might have a positive interest rate to it, but the price that you paid for the bond, meaning that what you have paid for it, by the time it has matured, the face value and the interest payments that you receive from it would not cover what it is that you had paid. Scary, isn't it? Right? That you would buy a bond guaranteeing that it's going to have a loss if you held onto it to maturity. Right? That is negative interest rates. Now, the bond itself might have a positive coupon rate to it, but the price that is being paid for it has gone negative or has a negative yield to it. And the only way that could really exist, right, is if you have a mentality out there that there is going to be ever decreasing interest rates into negative territory. Because if that yield continues to fall, the price will continue to rise. So even though you have a negative bearing interest rate bond, you could purchase it, and if the negative interest rate goes continuously deeper into negative territory, you could sell it for a profit. This is a spiraling downward room because, like, you talk about the flood going in but a trickle coming out, nobody would want to be on the reverse side of it. People are okay so long as you can sell it off for a profit, right? Like, you can have the greater fool theory going, the idea that this thing is going to go up in value. But the moment that it reverses, nobody's going to hold on to a bond that is losing value and has a negative interest rate attached to it as well. No way, right? So there's going to have to be a whole different set of rules within the bond market in order to handle this sort of environment. Like, but nobody knows what that looks like, right? I mean, we've had little tastes of it, especially coming out of the European nations and stuff, but we never really had a really full understanding that negative interest rates would work, especially when it comes to things like the world reserve currency, like the United States and the dollar itself. Alrighty, guys. I'm going to have to call it quits here. Oh, we got so many super chats coming in, though. All right. Well, let's read the super chats here. All right. Angry Capital is $5. I've noticed the U.S. is starting to build trade networks with Mexico and some Central American countries for mid to low quality manufacturing. NAFTA plus, yeah, and that's just the thing. Like China is going to lose its manufacturing base just simply because its standard of living is moving up, right? And just like anywhere else, if your standard of living moves up, then you're going to find a manufacturing base cheaper in other places, right? And I mean, greed, whatever. Like you can blame it on the greedy corporations and all that other stuff. Yeah, that's fine. They're assholes, whatever. Like that's the way it is. It's just the way it is because Cantillon described it from hundreds of years ago. So there's no changing this, right? There's no changing what's going to happen when it comes to the manufacturing leaving. Once the people themselves have moved into luxurious lifestyles and have a higher standard of living, you're going to find somebody else out there who goes, you know what? I'm going to do it for cheaper. I'm going to do it for cheaper because I don't have that luxurious life. Just saying, right? And yeah, that's exactly what's happening to China right now. And they're gonna do something very clever. This is what I love about Chinese watching this because, and it's not that I'm in favor of it, but I just love the strategy behind it because it shows that they are thinking and know that this is coming. What China is going to do is they're going to overproduce. They're going to flood the world with products to the point that it destroys these other companies. All right. And China knows that they're going to destroy themselves at the same time doing it, that they know that their companies are not going to succeed profiting from this strategy. They know it. They are okay with that because what they are going to do is destroy all those other companies out there who are trying to compete against them. Because they have flooded the system with so many products, all the companies are going to begin to fail in all nations, including China. But because China has so many of them, they're going to have the surviving companies. And when at the end of it, even though they lose a bunch of companies that have been producing themselves, the ones that are left over are going to be in China because they had so many of them and they were the ones who were overproducing. Yeah. And this is like China's strategy inside of this is quite unique. They also have the Belt and Road Initiative, which they lent out in dollars. And you think about that. They lent money to all these nations all over the world, right? They did their infrastructures for ports and power facilities, power plants, mining operations. All this stuff was done in lending from China to these nations in dollars. Those things are due in dollars. If there was ever a dollar demand, a liquidity crisis, and these nations were failing to come up with the dollars they needed to pay China, who ends up owning all that stuff? Who owns the ports? Who owns the coal mine? Who owns the infrastructure that they had lent the money for? Right? This is what China has positioned themselves for. They ain't stupid. They know that there's issues coming. Right? And they know from themselves that their manufacturing base would leave. They know about the Cantillon essay. They aren't, stupid to this. And you can see them. You can see what they're doing right now. And so even though they got this manufacturing base that's leaving and moving to these other nations, they're going to ramp up their production, absolutely flood the market, destroy all kinds of corporations or manufacturing base all over the world, including some in their own nation. But that's okay because they're going to have enough left over to keep going. All right, Justin H., thank you so much for the $5. Are you aware of any list or compilation of manufactured goods, services, resources that are more economic to make in the U.S. versus outsource and import? Well, I mean, I think like agricultural products here in the United States are probably one of them that would be cheaper to manufacture here than it is to bring in from other nations. Although we do see situations like wheat from like from the Eastern European nations have gotten so cheap because they had such an overproduction of it that some of the manufacturers or some of the producers of products that use wheat as the component are buying them from the European nations. So that does happen. But I think like agricultural products here in the United States are probably more efficient to produce and export out of the United States than it is to import. Military grade weaponry, right? All that stuff, like, yeah, huge. Um, there's a lot of things that we make that are like, the United States makes wonderful and lots of products. Like, we make a lot of stuff. And when I talk, a lot of times people probably get the impression that the United States doesn't produce anything. That's not true. Like, the United States produces an insane amount of stuff. We're a major manufacturer. The issue is that we don't make as much as we buy, right? So we import a hell of a lot more than we export. And that's the issue, right? Not whether or not we make stuff. We make a lot of stuff. We're a manufacturing nation, we're a producing nation. But we don't produce as much as we import. And that's where the critical issue comes in, because if it ever came to a situation in which that people were no longer accepting the dollar, our way of life, our standard of living would start to collapse. Because you think about it, we import a hell of a lot more than we export. So if we're importing our way of life from other people, right? We're not producing it for ourselves. There was a time we produced it for ourselves and for the other people. That was back, during the great industrial revolution, when the standard of living here in the United States was the best in the world, where one income could produce enough for an entire household, right? All the family, wife, kids, college, retirement, vacations, all the stuff, right? But that's when we were producing enough for ourselves and the rest of the world. Now the rest of the world is producing stuff so that we can have this higher standard of living. And again, there's no changing that. Like, if you want to change, like, in order to fix that, you have to stop buying stuff, right? Stop buying things from foreign production, which is going to end up being even more devastating to them, because they need us to buy their stuff in order for us to export the dollar to them, right? So that they have money to, then buy the things that they need. Like, production is producing for the United States. So, but if we were to try and reverse this whole situation, then you're talking like, generations of holding back on purchases, not taking out any debt, fixing everything that you have ever had in your entire life by not buying anything new, and doing this forever, paying off like debts and working hard and just like sacrificing everything you've had or any kind of enjoyment, and doing that for a long time. And I just don't see that being the case. Like, nobody's going to do it. Wow, look at all these comments. My goodness. All right. Trolls in the chat. Yeah, it's all right. They're here. All right, good stream chat. Yeah, thank you guys. All right, this has been a lot of fun. What the book you held up earlier? Okay. So this is Cantion's essay on economic theory, right? It's a really old essay. It's written hundreds of years ago, but there's some economic forces that he describes inside of that essay that are very prevalent today, and like you can see the resemblance of them. And now there's 3 chapters in there that I really recommend. It's part 2 of the essay. It's chapters 6, 7, and 8, the increase and decrease of money to the state. Now, you don't need to go and buy this theory off of the internet. It's for free at the Mises Institute. So if you just type in Cantion essay on economic theory, you should be able to find it right away. However, if you go to one of my more recent videos that I have put out, because I don't think I put a link in it to this particular live stream, but if you go and check out one of my recent videos, and down in the description, you will find a link to the essay that you can buy this essay on Amazon. And by following that link, you will be supporting the Uneducated Economist with the affiliate program through Amazon. But even if you don't buy the essay, just by clicking on that link and going shopping on Amazon, anything you put in your cart for the next 24 hours, I will also get a commission on those items as well. So even if you don't want to buy the essay, just by going and clicking on that affiliate link, you will be supporting the Uneducated Economist with your purchases through Amazon. All right. I like silver so much. Yeah, I do too. All right. Show us your car, you weed. Not what's in it, just a quick overview of the interior, exterior. No, I don't really want to show the exterior too much, because I think people might like kind of, I don't know, screw with the car or something like that. I mean, it's not like they couldn't figure out where I'm at or what it is, but, and as far as the interior, I don't know, I just got a bunch of stuff in here. Like, no, I'm not, I don't want to. Hey, good seeing you two all nighter. All right, self-education. Silver equals value. Yeah. All right, you guys are awesome. Thank you so much for being here. I don't really want to end the chat because we have so many people who have hit the like button. We got 452 likes now. 667 people watching with $53.97 in super chats, because you guys are always so supportive of the channel. But we have plans to go bowling, and I think the bowling alley has opened up 20 minutes ago, and so we're going to go off and do that. All right. At what age do you think someone should plan to retire? When their income exceeds their bills, their standard of living. That's, their cost of living. That's when they should retire. I mean, I don't know. I don't know if I'll ever get to that point because I got a long ways to go on this house yet. That seems like a far off thing as far as retirement goes. So, all right, you guys are so awesome. Thank you so much for being here. This was a wonderful live stream. I loved how many people had joined in on this. I love it how everybody hit that like button. Thank you so much for them super chats. Thank you so much for the great comments. You guys are so awesome. All right, uneducated economist, you let me know.